Hello, my YouTube friends. So today, bond market collapsed, stock market collapsed as CPI came in a little bit hotter than expected, driving those mortgage rates and interest rates higher and the stock market lower. My name is Adam Kahn, and I'm the Rational Investor. I hope you guys are enjoying your day. Beautiful out here in Vegas. Today's Wednesday, April 10th, CPI day. As you guys already heard in the intro, sent stock market collapsing, bond market collapse, which sends yields higher and rates higher as CPI came in hotter than expected. Before I talk about that, if you guys could do me a favor, smash that like button, hit the subscribe button, make some comments. As you all know, that helps YouTube's algorithm, helps other people find the channel, and it helps us grow. And if you're enjoying the content, I really appreciate the support. I'm sure you guys are aware, or I would assume that you're aware, CPI came in and it came in higher than what was expected, which drove the stock market lower significantly. It also crushed the bond market, which sent interest rates higher. The reason for this, I think, is pretty evident, which is puts the Fed in a tough position where they may not be able to cut rates at the next meeting, even though that's what Powell started hinting at the last conversation. With CPI coming in higher, which is what they use to judge inflation, it shows that inflation isn't slowing as quick as they were hoping. It means they're going to have to continue to just hold rates where they are, and it's going to drive interest rates higher, at least in the short term. Now, in terms of equities, I see this as a good buying opportunity. Now, keep in mind, this is not financial advice. I'm not giving any trading suggestions. You guys need to do your own research when you guys make those decisions, and don't listen to me. I'm just some guy on YouTube sharing my thoughts and my opinions, and you have to do your own research of what fits you. The reason I think it's an opportunity for the equities is whether there's inflation or they're able to cut rates. In both scenarios, I see the markets going higher. Now, we still might have some follow through tomorrow or throughout the week, but here's my theory on it. If CPI is high and inflation is still sticking, that gives room for companies to continue to raise their prices. As there's inflation, if you're Target, for example, and you're able to continue to raise your prices along with inflation, that gives you better margins and gives you better prices, gives you better earnings, and with better earnings, it should drive the stock prices higher. And equities are a great hedge against inflation because of that. As inflation continues, their profits should continue. So I think short term, you'll see this correction. But again, I see it as a good opportunity to maybe buy some things that you've been wanting to. In terms of the bond market, I don't see it the same way, because if the Fed's not able to cut and rates stay stickier and they can't lower things, odds are the bonds could follow through to the downside, pushing rates even higher. And if you're sitting on cash, maybe it gives you an opportunity to move into those, CDs or things that you've wanted, because you should see better pricing on that. I really think the Fed's in a tough position right now. I think they actually want to cut rates. I think they want to help some relief to the banks, because as the banks sell their mortgages and bond products and things like that, if rates continue higher, well, it squeezes them in terms of making those bonds and those mortgages less valuable, because they're selling them at current rates. And if things start to drift higher, those products become less valuable. At the same time, they are legitimately worried about the inflation. So they're worried if they cut rates, they're going to spark the inflation and make it worse and put themselves in a bad situation in terms of what to do about that. I'm not sure what they can end up doing. I see where their hands are tied. At least for now, I think they just continue to hold steady and watch the data to see what their next move is going to be. They've indicated they think it's going to be a cut, but if inflation sticks around or starts spiking, they might find themselves in a really tough position and may end up having to go the other way. Now, the discussions that I'm hearing are more likely that they're not going to be able to do anything. They're not going to raise or cut, possibly through the entire year. What would be interesting to see is if that's the route that they go with, does the 10-year and the 30-year start to go lower in terms of price and higher in terms of rate? Because it would be nice from my side if you could see the yield curve uninvert. But what I think the worry is, and the reason you're seeing it actually invert even worse, is if the inflation is stickier and lasts longer, and the Fed gets in a bad spot, that the banks really will get squeezed and they won't know what to do in terms of those markets. Either way, I still think equities are a buy. If the economy slows down and the Fed's able to cut rates, you should see stocks go higher because the market's going to be so excited that the Fed's able to cut rates. If it doesn't, and you see inflation continue, just like I was explaining, if inflation continues, companies, whether it's Target or Walmart or whoever, they're able to continue to raise prices, giving them better profit margins, helping to increase earnings, and earnings are what eventually drive the stock market. So I think this down move right now creates an opportunity to get long the equities you've been watching that you might want to be buying. Now, of course, I can be wrong, which is why I say you need to make your own decisions. But I'm just not this gloom and doom guy. I don't see this big collapse coming. I think we're going to slow down at some point, but markets have a tendency to go a lot further than anybody ever expects. And sometimes that can be years. So I feel like we're at the stage that the markets are just going to keep going and really surprise people before we get to the point that they start to turn or slow down. And hopefully they land it really well. But even if we have a hard landing, I think we have a big up move before that would happen. It's just what I see. It's a really interesting spot we're in right now. The companies are doing well, but I think it's a really small percentage of people that are driving those profits. There, a lot of people are still stretched, but since they still have jobs, they're still living their lives. They're just stretched because the things they buy are going up so much and they don't want to stop buying the things that they're used to having. But at some point, they're going to have to downsize. And I don't necessarily mean like downsize where they live or things like that. But if they take a big vacation, they're going to have to make it a small one. If they have a fancy car, maybe they're going to have to downsize to a regular car. Whatever those things that are causing them to overstretch, because everything's getting more expensive. Your insurance, whether that's health insurance or home insurance, the electric bills, the gas bills, the water bills, like it's not just one thing that's been going up, it is inflation throughout everything. And I'm sure everybody's feeling it. So we're having to make decisions in terms of what to continue with and what not to. At some point, that comes to a head and it'll slow down in a quicker manner, and the Fed will be able to cut rates. But in the meantime, as long as CPI continues to come in high, I don't see an ability to cut. I guess we might be surprised at what Powell says at the next meeting, but I see it at the gas tank, and I don't even have a gas car anymore. But I see the prices going up and up, and I see the oil price on CNBC going across the screen. Today we were over 86. The interesting thing is, I was thrown off as to why Bitcoin would have fallen on the news. And at least last I looked, by the end of the day, it had completely reversed, and I saw it was over 70,000 again, which makes more sense to me because if we have inflation, things like gold and Bitcoin, that they should go higher. Now, that doesn't mean that's what always happens, which is why I say you need to make your own decisions. Like, things don't always make sense in the markets, and nobody can really answer why. They're very emotional and they do have to do with supply and demand. Now, equities in the long run are going to end up being based on their actual valuation versus earnings, but in the short run, they can have really big swings that make no sense at all. And really, those are the times that maybe there's good opportunity to be had. So, what do you guys think? What do you think's going to happen with the inflation? Do you think the Fed's going to be able to cut rates? Do you think they're going to get stuck in a position where inflation's worse than they thought and they're going to end up having to raise rates? Or do you think they'll be able to leave them where they are and eventually things work themselves out? Let me know what your thoughts are. And anyway, have a great rest of your day. Don't forget again, thumbs up, subscribe if you haven't, make your comments, and I'll talk to you soon.